We are back after a great holiday weekend. The market's not feeling quite as hot. We'll discuss that, some of the latest data coming out, what we're looking forward to this week, and much more today on Money Never Sleeps. It was only a few days, but I missed that theme song. Before we get going today, everyone, do us a favor, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice, so please do your own research. If we're making any buys or sells, welcome back, Mr. House. Good to see you. Kev, we have, a week where we're going to get some good data coming out that I think is going to, provide a little bit of insight into the direction things are headed. The markets right now are kind of struggling for a direction on the tradfi side. We see down overall on the day, but it's very marginal. Between like the NASDAQ is flat, Dow and S&P are down less than a quarter of a point. We see a few tech stocks having, slight gains today, a few down a little bit. There's all just this anticipation building up toward the PCE reading on Thursday, toward more unemployment data next week. I think, we're at a point where the margins are really thin on the gains that you're going to make moving forward, in my opinion. So we're going to discuss that. Let's quickly go over like what is coming out this week on the report side. So not much. We had some new home sale data today that came in under expectation. We'll talk about the housing market here in a minute. Tomorrow, we get a bunch of Fed governors speaking. On Wednesday, we get the first Q3 GDP revision. Not expecting a whole lot there. The Fed Beige Book comes out. Will they be discussing Taylor Swift? That is what everyone is talking about. On Thursday, we'll get personal income, personal spending, and PCE. That's the big one. And then the next day, Jerome Powell is speaking. And I'm not, anticipating him to say anything monumental, right? Like he keeps everything very close to the vest until his presser. And even then he just kind of goes by the data. So I will be curious what he has to say. If anything noteworthy is said, the markets will move. Like I think that is going to be impacting the markets for sure on Friday. So that's what we have in the week ahead there. What are you looking at coming off of the holiday weekend? We haven't had a show since I wasn't on since Tuesday. So we've had a few days. We've seen the crypto markets start to give back some gains. ETH and BTC have lost some key levels. ETH is now down below 2K, Bitcoin below 37K. What has your attention right now, as I've done a very long intro at this point?
All good, man. Glad to have you back. It's just this is a wild time right now, and we've had a lot of days where there's been low volume, but we've seen some volatility in certain things. Like the VIX has been really interesting to me. Just how much they've been crushing that. Looking at the dollar as well, they've been crushing that like crazy. And I do want to talk about this buyback window. I alluded to it beforehand, and if you look at the thumbnail, it says 2 weeks, and that's what we're talking about. So the stock buyback window pretty much allows these companies to buy back their stocks, and up until that date, they're allowed to purchase them, right? The thing is with that's genuinely driving the price up. And what we're seeing is a lot of people, from these hedge funds, mutual funds, anyone who has money in the market, they're playing chase and they're just trying to find the gains because next year they're going to want to tell people like, look at our returns for the year. We've done extremely well for ourselves. And it's like, yeah, but you guys are chasing the market. That's not necessarily a great way to see the markets, right? So once this liquidity dries up, and it's supposed to be December 8th, which is also the same day as unemployment, I think that's when we're going to start to see a lot of this things turn in the market right now. I'm going to pull up the S&P real quick. I mean, we're not to dive into it too much right here, but the S&P is down, 7.45 points or something like that today. Where am I? Here we are. And the interesting thing is we talked about all these gaps that we created to the upside, right? We created a ton of them. And even the other day, I think it had to be, what day was this? Wednesday? Yeah, it was Wednesday. It was Thanksgiving. It gapped up and it filled this last gap that was right up here in this range of that we had not filled yet. And that pretty much meant that we filled up all the gaps to the upside. There is no more that are currently left yet. It was Wednesday, see right here. And then right here is the gap that we filled. So we've created all these gaps to the upside just to close all the gaps that were currently there, north of us. So now we have 1, 2, 3, 4, 5. It's a lot of liquidity that's sitting there. If we look at this on the daily stochastic RSI, we're at 98 and 99, almost completely overbought. This red line right here is the deadline for the stock buyback window. We can see all the gaps that are currently down here. And again, we're in this parallel channel, right? We haven't put in a higher high. We're still below that. We're seeing some rejection at this range. Now, the question is, how high will this go? I mean, obviously, the Nasdaq's giving back all the gains today. We have a gap that's down there. And once again, it looks like it's finding, rejection on this white trend line right here. So we have to question, all right, what's the next play for, the market? It's like, okay, can they keep playing chase? Sure. I think we're seeing a bit of distribution. That's why it's selling off a little bit here today. They're kind of cutting some of their profits early. I would anticipate that's a lot more of the investment banks, guys that have a lot of money in the market. I think it's also showing that we might have, let's say 7 of the next 10 days are probably going to be green or flat. They're not going to be necessarily negative. That would be my anticipation, but I don't necessarily think that we're going to all-time highs. I saw someone today talk about, maybe it was Deutsche Bank. They were saying like 5,500 by next year for the S&P. I think we're getting ahead of ourselves way too early right now. And there's a lot of signs in the market that are just saying the exact opposite. I mean, I'm not going to get into it right here, but just take a look at gold, guys. Gold's at 2013. I mean, it's just going up. That's not behavior of something that shows you that you're risk on equity. This is more of like, okay, now we need to be cautious here. We should probably be thinking that we're risk off here, especially with the VIX being so low and coiling up to pandemic levels, like February 2020. It's a really odd situation in the market, but I do think that this buyback window is probably playing a lot into this FOMO and then a lot of people chasing gains.
Okay, let's talk a little bit, what are you really keeping your eye on when it comes to the data this week? I think people are starting to realize that maybe inflation is a little stickier than they were giving it credit for. And this whole notion of we're going to be cutting rates. Let me pull up as I'm talking. I want to see what the futures are looking like for the Fed funds rate, because that has been on the move in the direction of another rate hike. I'm not seeing it, for December. What is January saying? We're seeing a little bit, there's definitely been some movement there with the idea of a rate hike in January. Now at about 11% probability. It was at 0% probability like 10, 12 days ago. So to me, that's an indication that, okay, maybe the markets are waking up a little bit. But if we get a hot print or even a flat print, like if we get another month of PCE not moving, even after, we'll see what the headline number looks like with the energy costs going down. But if we see another month of the core reading staying flat, the Fed is not going to be happy about that. And we are going to see another rate hike being priced in. People are not going to be borrowing as much. People aren't going to be spending as much. We can also discuss this, how the buy now, pay later programs just for like holiday gifts, like how much is being put into that. Like it's really bad. And to me, that feels like a game of chicken that consumers are playing where they're just going to drive that car straight off the cliff.
Yeah, this entire Affirm thing, and it makes a lot of sense why people are doing it because credit is drying up across the board. They're maxing out. I saw someone say that people now have still like 400 something billion dollars worth of savings from pandemic stimulus. I'm like, guys, we got 3 checks. One of them was $600. The other 2 were 1,200. They don't have that fucking money anymore, right?
Yeah,
it was 9.1% inflation. Idiot economists, dude. This is what I say. When people are chasing gains, they're chasing the data that they really want to hear. They're idiots. They're people, and this is 100% the Big Short. The entire thesis of the Big Short. There are dumb people at the top that are making decisions with money that aren't necessarily always the smartest ones. That's why the markets aren't correlated to the data that we're getting. I don't know what to expect with inflation. I don't know if we're in deflation or if we're in inflation. It's really hard to gauge right now. I think that there's a case that we could be on.
Sorry, I just need to go on a rant for like a hot second.
Go ahead.
Right now, and this is why I love our channel. I love our show, but we will never have like a huge YouTube following because we're just honest about shit. And so many of these fucking financial content creators just talk so far out of their ass because it's an attention economy. All they care about are clicks and views and ad dollars, and they will say whatever bullish bullshit needs to be said in order to get more attention on them. So fuck all of you who are like talking out of your ass and spreading this garbage information for the mere fact of you want to get some more clicks. Like, kiss every square inch of my ass.
Yeah, and fuck all the people during the QE fucking era too, right? Fuck every single one of them because they think that everything's gonna be the same forever. Sorry, now you got me pissed off. There's just so many people out there like,
let's just fucking let it rip.
Just trade the markets. If you can't trade this market, just shut the hell up. You're talking about this after a 14% move to the upside. You're talking about like being bullish here. Shut up. You know what's going to happen?
Anyone can trade a bull market, but only the real traders can trade a bear market. It's like, fuck off.
Yeah,
Let me see the P&L, and then you can talk shit.
That's why your freaking profile picture is Tyler Durden or some other thing that some other guy, something more creative than you already came up with 12 years ago. Stupid. But yeah, I'm pissed off. But the Affirm thing is really important because, like I said, there's lines of credit that are just drying up. And it's my generation that's messing up here. This is their big mistake that they're just absolutely leveraging debt. They are going out to put down 20%, 20% or so down at the time and 5 payments or whatever it is to buy an item. And then on their credit card, it's 30% interest that they're paying. It makes no sense whatsoever. And eventually it's just going to blow up in their face. And here's the thing. You got kids that are paying both their student loans right now and then stupid things like, I don't know, whatever they're buying with Affirm. And then they also got housing and shelter, which is extremely, up the fucking wazoo right now. I don't know what's going on with the youth right now. They're just absolutely being stupid in this market. But again, they don't know any better. And QE is a huge part of this. We had QE from 2011 all the way to even current, not currently anymore, but 2021 or so. Like it was an era of just greed and easy money. It's not where we are anymore. And I can prove it. Let me just,
go ahead.
I got to pull the chart now.
Prove it.
Pissing me off. All right. This is what pisses me off more than anything. We are in a huge contraction. This is the M2, the blue line. The red line is consumer loans, automobile loans, and from commercial banks. And the other one is credit cards and revolving plans. That's the green line, right? Everything is coming down below from the year prior. We're down, let's see, consumer credit loans, that's 11.33% in Q3. So people are definitely leveraging the credit cards. As for loans that they're borrowing from, for automobiles, homes, that's down 2.13%. And the M2 money supply is down 3.76%. The reason why that's happening is because these banks, if no one's pulling out these loans at these high interest rates, that means that there's no way that they can create debt. And, with fractional reserve banking, we deposit $1, they loan it out to someone else, that creates $2 in the system. That's just the way it works. If there's a contraction, that means that there's going to be more supply of assets and equities to US dollars, right? And we're in a debt-based economy. When that has to be paid, it has to be paid in US dollars, right? That's the world reserve currency. We're seeing a lot of problems in China right now. We're seeing tons of problems in Japan. I mean, Germany, Italy, there's tons of problems globally right now. It's just we're not watching anything because we got the blinders on and we're only focused on what the US stock market's doing. If there is some type of margin call, they're going to need US dollars. That's a demand for US dollars that's going to be needed. And they're probably going to trade in their equities, sell them, which are probably dog shit by the time that they need the US dollars. And the US dollar is probably going to pump. And that's going to kill the entire stock market. I mean, that's just one thing that I'm seeing right here. And that's something that really people need to be paying attention to. I longed the dollar this morning because I was like, I want to get out of the VIX trade. I think that I believe in the dollar more than I do volatility. I think volatility will come in, but I can't bet against that in the short term. I think the dollar is giving me a lot of signs that we could be going towards this, especially if people continue to leverage debt. At some point, the US dollar is going to come back and it's going to be strong against these assets. Now, the other thing I do want to talk about that kind of goes in with this is the bank term funding program. We're talking about how the banks are fine, right? Banks are solvent. There's no liquidity crisis whatsoever. Okay, we had a bank collapse, November 3rd. That was Citizens, Sac City, Iowa. A small bank, only like $66 million worth of assets. But this is the bank term funding program. This is the one that saved Silicon Valley Bank, First Republic, Signature. It saved all those people who had deposits in those banks. Look at this now. Okay, 0%, right? Prior to March 2023. March 2023. Okay, it shot up, shot up, shot up. If there's no liquidity issue, why are we at the all-time fucking high right now? That's 100 and if I'm reading this right, that's $114 billion that they've borrowed from the bank term funding program program sitting here in November, and this thing's supposed to end in March of 2024. That's a huge problem. And again, if these people are holding all these assets that are pretty much worthless now, they were buying pre-pandemic when rates, or even during the pandemic when rates were 0%. You know, we're having a huge problem where there's a lot of assets in no dollar demand right now. So I think that we're hitting for a big liquidity crunch. I don't know if it's going to be a credit event or a debt crisis. I don't know what's going to happen, but this isn't lining up with what the equities are doing right now. Equities are so overweight and they're so overpriced. Eventually this bubble is going to burst. And I think that there are signs that there's cracks in the system when we look at gold and we look at silver, which is, you know, being bought up by China right now. I don't know, man. That's my big rant, but it's something that we need to consider, and no one is talking about it whatsoever. Anywhere I go, everyone's just talking about, oh yeah, Nvidia's going to $650. Fucking video right now. I'm sorry, respectfully.
Respectfully, man. Fuck you.
Yeah.
All good, man. Yeah, everything, you know,
makes no sense.
At the end of last year, when everyone was shitting their pants, it was the time to be buying. Now everyone is ready for the market to rip. I don't know, like, do people ever learn that you should be, you know, yes, timing the market can be a problem. And we saw it this year for everyone who went risk off back in December 2022 or January this year and went into, you know, high dividend stuff. But you have to just kind of, you know, trade the opposite of sentiment, and you're probably going to do pretty well, especially when you look bigger picture and you see that there's a lot of red flashing lights that are telling you, hey, maybe we don't need to go too crazy right now. Okay. So yeah, I'm just kind of at this point where I don't really feel the need to do a whole lot in this market. Like, I don't want to sell anything right now because I already have a fairly significant tax liability for this year, and I don't want to add to that. So if I can sell anything at a loss at the moment, I'm doing it to you know, harvest that and try to cut down on my tax liability, because I want to have as much cash at my disposal for when I do think this inevitable dump happens. And so if that means I'm sitting here in some of these, you know, it's not sexy, but a 5% gain on cash at the moment, like, and if it's, you know, I'm not like locking it up somewhere and I can easily access that cash and move it quickly if there's a drop, like, give me that every day of the week. So that is kind of my game plan that I've been sticking to. And it's boring. It's not sexy. It's not promising a 50x in the next 3 months. But I think in my situation, it's the best way to handle it. So I'm curious, do we want to get into some of the crypto charts now? Because I think TradFi is pretty boring at the moment. I don't know what else there is to say there. But, you know, we didn't discuss the weekly close last week for crypto. We're coming near the end of the month. We'll have to see what happens in that area. But let's dive into the crypto charts if that's cool with you.
Absolutely. As I go to the crypto charts, I do want to talk about Cathie Wood, because this does kind of play into what Bitcoin and everything else is doing. She's offloading Bitcoin right now, right? ARK Investments, they sold DraftKings.
That might be a buy sign. That might be the sign that shit. I mean, if Cathie's selling, I might want to be buying.
Man, I shorted her a few weeks ago. Maybe I did the wrong thing, but no, it's I think that a lot of people got really optimistic with a lot of these things. She's optimistic on Tesla. She's optimistic on, you know, DraftKings, and well, she's selling a little bit of it now, but also Bitcoin. And it's like, I think Bitcoin is in a place, and we're getting news like the Binance situation isn't even unfolded completely. Like, we're still talking about Binance. Binance is a consequence of FTX still. We can see that there's contagion across the entire industry. The infrastructure for crypto is absolutely screwed, in my opinion. But I want to go into the smaller time frame for Bitcoin. We're just currently sitting just below 37K. We had a bit of a sell-off the past 2 days. But let's go into the 4-hourly and look at what we were seeing here. People were talking about, you know, this is going up higher. I was getting a bit questionable around here. If you see this, we can see that we're finding resistance right before we got to 38K once, twice, almost 3 times, broke above it, but then came right back below it. This is a sign that we're in a distribution phase. There's not necessarily a lot of demand that's going up here. And this is, again, post CZ and Binance, all that stuff that happened last Tuesday. So when I'm looking at this right here, I'm seeing that, okay, maybe there is a chance, just because everything is kind of oversold currently. Like, if we look at this on the daily, maybe there's one more run up to that 38.5, 40K level. I'm not getting super bullish on that, though. I think that's a possibility just to liquidate people. But for the most part, when I look at this, even from the beginning of the year, it's still one massive parallel channel, right? And I mean, this is no different than the Matic one that we were talking about a long time ago, the one that we made the bet on, which I'm probably going to lose that thanks CZ and Tether. But I mean, no, if we look at this just technical based and, we account
you can send
for
that
the little bit of
$100 in your favorite stablecoin to jweb.eth. Okay.
You're getting UST. No, I'm just kidding. I'll give it to you in
don't give me
I'll be
funny money.
nice.
Give me something,
I'll send it
real.
to you in fiat. Because see, I'm not an asshole. I still believe in the dollar. I think that it's going to do well. I'll sell you $100. But the problem here with this pattern is these tend to break to the downside. I mean, you got a pattern right here, downside, pattern here, downside, pattern here, downside. I think we have so many gaps that are down here that aren't, natural gaps. We're seeing that there's a lot of stable coins that are depegging today, not significantly, but TUSD, FDUSD, from the funny ones that Binance uses their top trading pairs for the entirety of March. I mean, from March 2023 to roughly September before the USDT pump started coming in. Those were the ones that were depegging. I think there's a good chance that stablecoins continue to depeg here. And that just shows you that there's a lack of liquidity in the market. And if that's the case, I mean, this thing's breaking and it's going down like crazy. I mean, if this thing does turn out to be a parallel channel, where is it probably going to go? Probably the origin of that. And the origin of this, if we're looking at the top to bottom, I mean, that's roughly, 15K. It's the FTX low. But if we're looking at the true origin of this, that's probably somewhere around, sub 14K, somewhere around 12K. I think that it's going lower than that. I think that there's another fair value gap from the Bitcoin futures that's down at 9750. I mean, we filled the one at 36K already. There's one at 20K. There's a good chance that probably both of those are going to get filled out. And I think a lot of this is just waiting to go. I mean, if we look at this on the daily, sure, it's oversold. But if we look at this on the weekly, I mean, it's 99.75 and 99.92 for overbought, right? If we look at this on the monthly, we're 89 and 84, and we're a few days away from, what is this, December? Right here with the month that's up 6.65%, that'll be in the 90s by that point. And the volumes are extremely low. I mean, you can say it all day because you understand it. What is that, J-Web? Low volumes?
That's bearish divergence.
You got it, man. And that's the problem that people aren't seeing. They're seeing a pump go up on no volume. What is that? That's not sustainable. That's going to break through at some point. And I'm telling you, everyone, this right now, with the amount of USDT that was out there, I don't believe USDT was paired one-to-one. I just don't. I think that's why we're seeing a lot of money move around. We're seeing a lot of money move to Binance from Justin Sun's wallet. There's a lot of funny stuff that's still going in crypto. So yeah, could we short this and try and make some money? 100%. I wish there was a safe way for me to short this right now, but everything is either in BTC, ETH, USDT, or some other stablecoin pair where it's like, okay, sure, I could short this, but at the end of the day, Bitcoin's price is probably going to go down if I short it in BTC, which is probably the safest bet out of them all. Or if I do a stable coin, it's like there's a good chance some of these could depeg. I mean, I think the problem still remains. And as BlackRock said, USDT and USDC can be easily manipulated. And that's why I think that this is a dangerous market right now. I'm personally have no exposure to it other than, shorting Kathy Wood at this point because I think she's going to make a mistake. But that's pretty much what I'm seeing for Bitcoin. I think that we are probably going to test 35K. And if we start going below 35K on the daily, after we obviously push up a little bit, I think is most likely the case because, again, even I look at this pattern here on the shorter time frame. Look at this. This is, that's a 100% a bear flag that's ready to break at some point. So yeah, maybe we could fill the top of this around 38.5, 38.7. That would be the top of this channel. And then we could break down. And I mean, 35 is right around here, this little bit down here. But I mean, if that doesn't hold, probably gonna go down to 30K. And it could be fast. It really could be extremely fast. We just don't know the extent of how much liquidity is actually in there because the fiat reserves are not what the USDT and stablecoin reserves say they are.
All right.
What other stable coins do we have? I mean, not stable coins. Any other coins that we want to look at?
I want to look at ETH because it did go below that 2000 level. That's another one that, ETH, I think Sol has been making some huge swings. I'd like to do, if we can wrap it today with ETH, just quick breakdowns of ETH, Link, and Sol.
Definitely. Do you want to take a victory lap on this one? You called the double top, man, on ETH.
Yeah.
Yeah, you did.
Like,
you said 21. Yeah, you got it. Went right to it. I mean, it was pretty much even. And then we got rejected from it right there. So that was a great call there.
Pattern. But I'm loving it.
Yeah, I don't think many people are going to be loving it pretty soon. But yeah, we're in this really weird range right here, which, I mean, if you want to look at this on the macro, this is kind of like
Kevin,
us.
almost like we know what we're talking about. I don't know. Like maybe we've been doing this long enough and we were honest. Like maybe we know what we're talking about here. I don't know. Maybe I'm just wrong.
Sometimes I think I definitely make mistakes because I don't account for fraud. Usually, that's my biggest downfall. I think as a trader, I don't account for fraud, and I forgot that people are fraudulent in bear markets. You don't necessarily see a lot of people committing fraud in bull markets, but with the price action right here, let's just take a look at some of these patterns. I mean, is that not a parallel channel? It looks like it to me. For counting this, let's say this is, this is a 5-way move down here, but let's say this entire thing here is some type of ABC. I think it'd be like right here, and then eventually I have to come down. This C might come down faster than most people anticipate, but I do think it is going to have to put in a lower low. If this is the case, I don't think it's going to do a double bottom here at 886. I think it might even have to put in a little bit lower. I still think 636 to 700 is really, or 600 to 700 is probably a range that you might see it wick down to. Obviously, if it goes below this level though, here at 877, is that a terrible entry level? I don't necessarily know at this point. I'll just be honest with you, because I don't know what the infrastructure of this crypto space is going to look like if the price does get below there, as fast as I think it could. Without some of these bigger stable coins and maybe some of the regulation, there's a good chance that we could go a little bit lower. It really depends on what sentiment is. We have to understand that this is the first time. I'll even get into this real quick. The Bitcoin halving, right? First off, people are thinking that this is going to be a bullish catalyst. It's never been a bullish catalyst. It's just been in a bull market that the Bitcoin halvings have happened in the past. So it kind of just carries with it. This is the first time that we're actually in pretty bad economic state, outside of crypto and traditional finance and just, the global economy, that there's a good chance that things could play a little bit differently here. And the amount of supply that's being released, we're at 19 million currently circulating supply. The halving's not going to have that much. There's 2 million Bitcoin that are still available to be mined, I believe, if I'm doing the math right or something like that. So are we getting that excited over something? I think it's all hype when we look at the Bitcoin halving. So if that doesn't turn out to be a bullish catalyst, there's a good chance that, that could just absolutely tank this too, right? So I think we really need to be careful here when we look at things thinking that we're in a bull market. I don't believe that this is going to break to the upside here. I think that this is more likely, especially looking at stochastics, low volume. It's overbought in my opinion. Let's look at Solana now. Solana here. This is just stupidity. I'm sorry. I'm not trying to be, this is on Mexi. Let me try Sol on USDT. Let's go to Binance, their favorite trading pairs. Yeah, this is still stupidity in my opinion. This probably should have broke to the downside here, right? So that's we have to account for. There are things that happen, but this is also, October, where we started seeing tons of USDT start getting printed. So I think right around here, the 30th, that's when it started to break out like crazy, Pumptober, and it shot up all the way to 69 or so, almost $70. Absolutely insane, right? But look where it is now. It's at 53.72. And, that move from the top down is still, that's a 21% move that it dropped down quietly. Not a lot of people are saying that, but I do think that this did help a lot of people that had exposure to FTX themselves, most likely, that pushed the price up. Where do I think this is going? This is really interesting to see. Let's see if we can make sense of this right now. Let's say 5-way move. Let's go 1, 2, 3, roughly down here when it was at $8. 4, if this is 4, we're still, this is still possible. And we could have 5 come down to, I'm not in the negatives. I'm headed in the negative for a second. I'd say let's say between $5 and $8, something like that. That's still a valid pattern that could play out for Solana here. And then, we just have to see what happens if it survives, which I probably will survive because there's just so many people who are fans of it. But we still have to keep in mind that this move right here doesn't mean that we're out of a bear market. It just means that we're having a really good rally within possibly a corrective wave. So that's something to keep in mind with that. What was the last one? Chainlink you wanted to look at? Yeah, Link. Yeah, Link's had a pretty good pullback, I from where it was, very similar to Solana, right? So let's see, we went to about 1670 or so, go from top there to where we currently are. It's about 16.05% drop. We're down almost 6% today. You can see that we had to get this consolidation period and broke through. Again, this is 100%, in my opinion, all USDT. But, nothing you can do about that now. If we look at this pattern, it's a really interesting one. I'm not even going to try and chart this because I would have to get into subwaves and we'd be here all day. But we can see that this line right here, 1338, was a huge level of resistance. Let's see if it holds as support. If it's unable to hold this as support, there is no reason that we can't come back down to, $9 or so, be back in this range, which would absolutely suck for people who bought up here. But we have to keep in mind that it's very possible that could happen. The money printers seem to be turned off for the time being. I mean, they did print $2 billion worth of Tether since CZ's been, charged criminally. But we're going to have to see what happens here. Now, the big thing with Link I want to check is the stochastic RSIs. Monthly is stupidly overbought. It's at 195. Come December, this thing's, it's up 22% this month. I mean, it's going to be 100 and 100 most likely, right? On a daily, a little bit more room to the upside. But again, volumes are dying here. You're starting to see maybe this is kind of fading a bit, this pump. And on the weekly, like we were just looking at, we're 93 and 96. We're down roughly 5.67 to start the week. It's really interesting to be seeing some of this stuff, but I think when we do get that reversal, I can't tell you when it's going to come. I think it's going to be pretty nasty in the markets. And even if we look at this, right? This is the total market cap. We're looking at this parallel channel that I've been, watching it trade in. We haven't talked about it recently, but you can see that the volumes are going down as the price is pushing up. If we break from this parallel channel and we go to the origin, I mean, that's from here to roughly, let's say the bottom of this origin, that's a 53% move for the total market cap. That puts us roughly around $639 billion. Do I think it's going to hold there? Maybe it could, right? We have a lot of support up here. If we lose that, then we're coming down extremely low. We're coming down like 387 billion, which would be absolutely catastrophic. So we're going to want to see if this holds up here, the 750 billion to 700 or to 650. So 650 to 750 are going to be really important to watch. But this is no different than everything else. Look, we're at 99 and 99 on the weekly, on the monthly, December, like I keep saying. We're at 87 and 82. So that's probably, how much did we push up this month? 8.36%. Like, these are good numbers that we've been putting up, and we haven't seen any pullback. So we need to be, cautious here. I think that people are getting really excited at the end of the year, hoping for a Santa rally. It's like, did you not get one already? I think that's the thing that we need to be checking, keeping greed in check, and just saying, like, technicals don't look good and the money printer's not there like it was for pretty much the entirety of November.
Okay. That is going to be how we wrap it up for today. We'll be back tomorrow, same time, same place, talking about whatever is going on in the markets, any news, any data that we have. Appreciate you for joining us today. If you have not yet, do us a favor, hit the like button, subscribe to the channel, drop a comment, share us out on social media, give us that little Christmas present there. It would mean a lot. Have a great rest of the day. Stay safe in the markets. Randy, appreciate you as always. Mr. House, same goes for you. But take care, everybody, and we will see you tomorrow.
Take care, everyone.